Wednesday, January 15th, market analysis. Stan Ehrlich, good morning. We have a very profound trading day today in stock market indexes and interest rate futures. Because of CPI, and I don't normally mention fundamental information whatsoever, but consumer price index was much better than expected. Excuse me, at 5:30 this morning, California time, and caused the market to rally very sharply in 60 seconds or less. You'll see on the 1 minute charts I'll show you in a matter of a few minutes. What's happening? We got oversold, and that was on January 13th, only 2 days ago, Monday, and bounced off of a support line, a bearish support line on this downward sliding wedge. That's an important phrase formation that I'll mention on other daily data charts in a moment because it was prevalent and it seems to be dominant. Bounced off the line, oversold conditions, closed strongly. Yesterday, up a little. Today, pop. Where are we going? Probably at least up to the bearish trend line, the top of this downward sliding wedge, which historically is usually a bullish formation when it breaks out. And it's in most of these indexes, so pay attention. Not overbought. Got a little elbow room. And on the 1 minute chart, we are holding very well. Now, I do have to mention that this looks a little bit like a head and shoulder top formation on a 1 minute chart. The shoulders left, right are about the same price levels, true, which is normal. You do have a reasonable neckline running almost flat, slightly upper slanted over the lowest lows between the important points. But the distance from the first shoulder to the head of the formation is way off timing wise. It should have been back here at 8:52 or so California time. Instead, it was making a low. It should have been high, like that one right there, which is at a good price. So if it starts to head south big time, you'll have a lopsided 1 minute, few hours in length, looks like 3 maybe, top formation. And the minimum downside objective is still not that big a deal. You're going to be going down to at least about, 59.20, maybe a bit more. I think that's still significantly higher in the day. And by that point, you'll be very oversold, more likely than not, and start to rally again. Next, Spider. There is a gap to close, causing me to think that, hey, the formation I just showed you on the ES could come true, causing the spider to come down to maybe yesterday's high, close the gap, and then back up again. I am bullish, as we all know, longer and intermediate term. I hope we don't have a down January on a open January, close of January basis, which would historically imply as January goes, the year goes, meaning a down year. I don't think that's likely at this point. So close the gap, come back up again. Next, Spider 1 minute. Here is the gap in a big yellow zone. Remember, the gap is between yesterday's high, not the close, and what has been so far today, today's low. So if we come down to about 585, we will give or take a couple of ticks, close the gap in the SPY, which is currently 91.87, 591. So we have to drop 7 points. We're up 960 at the moment. So that's a lot, but possibilities. Next. But I'm not bearish. This is a little dip down. QQQ also has a gap. So for all practical purposes, I have no change of opinion. Same story. But for the QQQ, which doesn't have the same trading hours, of course, as the futures contracts, we do not have the same pattern because it started trading at 6:30 this morning instead of yesterday afternoon, albeit. Next, NASDAQ, downward sliding wedge, pennant, whatever you want to call it, the same for all practical purposes, bottomed out on Monday, right on the line. Well, you had to have the low on Monday first in order to draw the line. Sorry about that. But now you've got it. And almost a new high close for about 5, 6, 7 days, somewhere in there, holding very, very well near the highs. There's the possibility of using the 23-hour market, the futures market, NQ, of a head and shoulder top, and we're slipping off right now. And of course, the last shoulder high would have been late by a substantial amount, but the price level is also a little higher than what we were looking at before, which I think was a YM. So the body parts are there. These patterns are almost never perfectly textbook, although I know exactly what to look for. This isn't bad. This is still something you should keep your eyes on. Next, YM Dow futures is going to be different, I believe. We didn't act the same during the same last couple of months or so. After getting very oversold in the last couple of days, we've got a very good bounce. Now, this could very well be the beginning of more strength. I like what I see. I was looking for it in some shape or another, form or another. So I do think this is confirmation of sorts that we're going to see more strength, but maybe a little bit of a dip off of this situation. So here is the pattern. Now watch carefully. Shoulder high, dip down low, higher high, possible head of the formation. All you know at that moment is bull move continuing. Topped out after the fact, came down to about here, which creates now, after a rally, a little bit of a slightly upward slanted. But here's the interesting thing. When it broke it very quickly and sharply. So one is led to believe the shoulder might have been a little early because this distance is the same from the shoulder to the head, and then from the head to the shoulder would have been exactly there, but it happened a little early instead. So when it broke, all of this is normal except for, it's starting to get above the neckline again, dip down again. So I'm discounting this completely. Don't think it's actually happening that way, and cancel out. So, squish, there we go. I like the upside. I think there's a good chance the upside, we can make new highs by the end of the day and close above the high that we have so far. But I can't ignore some of them have this possibility, short-term minor formation developing. Okay, Russell, challenge resistance, stopped. Still in the middle of today's huge up day. No gap to close. Bounced out of the interior of a very big support area. I know it broke a trend line, but barely on a close 4 days ago, 3 days ago, actually 2 days ago, closed a little bit higher, still just about the line, and then moved up away from it yesterday, and then boom, today. So if we can close above, in particular, 23.14, we should have the more decisive continuation of that breakout, minor short-term, 1 month or so, breakout to the upside. Next, looks like it could have a little more downside correction, frankly. Don't see this as being particularly important one way or the other. So I would agree here in the Russell, maybe a little bit more weakness. And we're getting the bond market now. Ladies and gentlemen, yesterday I detailed that the bonds were in the process of possibly making a bullish engulfing ER buy signal green if it simply closed higher than the previous day's close, which it did. So at the end of the day, we have a bullish engulfing. ER3 buys at approximately the middle of the range of the signal day, which was yesterday. The signal trigger to be at what price is that little green line that you see right there, very small, but between yesterday's calculated numbers, not the middle exactly, When we open this morning in the bond futures market, ZB in Ninja, we have an opening that is under the bid for the ER3 entry for ER3 scalp and ER3 long position overnight or ER3 position trade. This, I believe, is the low of the day exactly. 110.30 is showing the low, and the opening is at 110.30. So theoretically, or in actual practicality, degree or another, we bought the low of the day on the opening tick. So we are now close to the high and last, way up at 12.14 and in around what I say it was, I don't know, call it 111. Point and a half basically on the scalp and or overnight position. Overnight position obviously is likely to hold on to the position overnight. The scalp is a different story, and I can't show you that at the moment. Take too much time. Next, 10-year notes did not get, I want to point out that double bottom formation of bonds. Now, it is not as close as I'd like to the low made way back in October of 23, 2.5 years ago. But on a giant long-term picture, many-year daily data or weekly charts, this low might be considered the second low in a broad double bottom. But look at notes. They are much more likely to be called a double bottom because the low that was made in October of 23 was very close to the lows we've had just in the last couple of days in oversold conditions. And I've been mentioning it. And all of a sudden, kaboom, we just exploded. Obviously, for fundamental reason after the fact, you have to look for these things before they happen. That's what a technician's job is, technical analyst. So up to resistance, stalled out, big up day at that point to begin with, hanging in there. Don't see anything that looks like a lot of weakness momentarily. And I know I don't look at these futures charts in a 1-minute chart like I do the indexes. I like what I see in general. Very fond about talking about this double bottom formation if it pans out in the months and months and months to come. Next, crude into resistance, still overbought, and substantially. 87 is not to be ignored in the custom RSI scale. So I am definitely expecting this to turn around very soon. I do want to point out that today is a bullish engulfing, but it's in overbought condition and at a resistance area for the first time in months. So this is one of those backwards reversals I've mentioned once in a while. I'm not exactly sure how to handle this, but I've seen this kind of activity end up being a high day. Next, we have not a lower low today in, what do we got? Heating oil. But we are overbought and at the top end, give or take a little, of a resistance area. And the ERRSI at 91-ish is super high. 90.32 is super high. So I think there's a very strong likelihood we're about to slip back down. And it would be fairly decent. I don't know, 2.44, maybe down into, 2.37. Next, we've got a top a couple of days ago for similar reasons, overbought at a resistance level at the top of the resistance zone, big sharp up day, and so far pulled back a chunk. Today, coming up a little bit, I don't think it's going to make it. I mean, new highs for the move. And it might come up a little more in this resistance area, but I think it's going to roll over and start to make new lows in the next few days, fairly quickly. Natural gas. Next, pennant formation persists, and we're right there right now. So if you're gutsy about this, this is a short sale. And your buy stop is very closely above the market, above these recent highs, or even tighter for some specific reason that you've been using a long time. Don't come up with stuff off the cuff of your, top of your head. There's no discipline behind that kind of objective trading. It doesn't work. I've been at this 53 years. You have to develop a trading system, technique, philosophy you stick to, historically proven in your own mind and on paper, spreadsheets, definitely. Gold at that point right now looks like it might, hasn't started to do it yet, turn right back down here. I think. If it does pop its head up and stay up and close, let's say above 27, 35, or 36, then the story changes dramatically. We have a long-term bull move. We have a pennant formation, which is normally a continuation formation of the previous trend. That previous trend was obviously bullish for several months. So this is a bullish pattern. Are we breaking out now or not is the big question. Next, silver. New high almost, but a new high close likely seems there. We're at the high of the day, high last right now, and bouncing off of support again. I think it's going to come back up into this resistance zone immediately, next few days. Looking pretty good. Platinum, kind of a different story here. Dropping off a second day in a row. It is not oversold, so I can't expect it to rally. It is in some support and coming close to some horizontal levels of previous support level, which is in the zone. So at any time it could turn back up, but I haven't got very good reasons for it one way or the other. I wouldn't go short here necessarily, put it that way. Next, overbought conditions around the top of a previous resistance zone. These are always, always, always the best educated guess calculation. And that's, sorry about that. That's what I got. So, could top out here in overbought condition. The fact that it's a little bit above the resistance area implies that it could pop up one more time. I don't know. I really can't tell right here. It's kind of a little bit stronger than I would like to see. If it was right smack at the resistance level, a little bit lower than where it is right now, then I'd be more inclined to say what I implied a moment ago. So I'm going to pass on this, to be honest with you. Next. Soybeans, oil, meal, corn, wheat, and then cattle and hogs. And that stock chart is just working out just fantastic. The last one I've got. Overbought conditions, but climbing in general. And I'm starting to talk in the last, I don't know, week or two about longer term bullish potentials. But since we're overbought the last few days, it's very plausible, probable, and it's got a doji right now, a little lower in the day, that it could have a downside correction. But if it hangs in there and doesn't make any serious new lows for any particular length of time, and I'm talking about probably the worst would be 985, although I would expect it to hold much more likely at around 1008. And we're at 1045. So if that develops anywhere from here down to about 08, and starts to make new highs after that, we've got something brewing much more bullish, much longer term, and I would start to call it a broad double bottom. Since last August lows, where we got an ER buy signal at the end of the trading range, and unfortunately not quite here, but that would be a approximate 5 months, looks like a double bottom formation. Pretty good. Next, oil, soybean oil. Broad, longer term head and shoulder bottom. I should put annotations under these lows, under the head of the formation, and under the appropriate lows here, although one really stands out much more likely than anything else. And that correlates with probably this time frame right here. So I'll call it a single shoulder at the moment with a couple of bumps on the inside. Head, okay. Neckline up here, very bullish longer term. Actually haven't drawn in the upside objective, which I'm doing right now. You measure from the lowest low on the same vertical point in time to the, come on, squeak up here. Come on, move it. That's about it. I'm off by an angle. That's no problem. Now you take this line and you put the bottom of it on your expected date in the future, which of course is not today, but I've made other measurements already. Um, they all should be in the same ballpark. Yep, they are. So around 61.15 is the potential upside objective. I like this one in the middle best. Objective if we break out to the upside in the next few weeks. But right now, maybe it'll dip down and then come back up again. Very interesting longer term commentary. And I don't get a chance to say it very often because these formations take many months to form. Next chart. Soybean meal lows, triple bottom, major historical support. But today, dipping back a little bit doesn't mean too much. Let's see if it holds here. I think it will, and start to make a big run up again into much higher levels. Next, we've got corn poking through resistance a little, overbought today, up again a little, 375, and probably tiring out. I wouldn't mind to see and would fully expect, without any longer term damage, a move down to 460-ish, maybe less than that, turning into new high ground relatively soon. Remember, we do have this head and shoulder bottom that's worked great. The upside breakout was initially here, but the real legitimate one was about here. It doesn't change anything. I'm still looking for 495. And we have already been up to 480 just yesterday. So a correction's due, and I think it's going to still get up to 495 or higher. End of story. Next is wheat. Now a double bottom is developing potentially. That's the low with the bullish engulfing smack dab on the bottom to the exact date, August 27th to 24. And recently, without a signal, unfortunately, a low just a little bit below the previous low in August. I need to close above 555 in order to be a little bit more aggressive about these statements, but it's hanging in there today unchanged, up, half a cent. And the dip down doesn't do any damage. I'm looking for higher levels and the possibility of a very bullish long-term bottom within a few days of it actually happening to the lowest low, commentary-wise. Okay, cattle, overbought, popped up, couldn't make a new high, tried it, dribbled back down a little bit below the highs of the last few days, showing a little bit of weakness in the sense. Net higher still 38, but I'd rather see it close much stronger than this if I was looking for follow through immediately to the upside. Right now, it kind of looks a little tirish. I am expecting, because of the overbought condition last several days, some sort of correction. So I'm not sure this is all that bullish looking, to be honest with you. I think it still could drop off some. 194 looks plausible. And maybe even back to 191. Next chart is pork bellies. Oh, well, I'm sorry, Miss Piggy. Oversold condition, bottomed it out, came up to resistance. I don't know. We're kind of floundering for the last couple of days here at the resistance area. Not much to do here except for wait for signals. I don't know. This could be kind of expecting a little bit of a dip. I'm going to pass on the commentary. Let's look at that one stock, SQ, that I've been monitoring day by day now for about 2 months. I told you, well, I showed you there was a head and shoulder top. There's the neckline. Classic breakout. Downside objective forecasted to be about 82.5. It got there just a few days ago, Friday, I believe. Monday, Tuesday, Wednesday, bottomed out on Monday in support. I outlined this a long time ago and didn't quite get oversold, but very close. But, I don't count close. And then started to rally yesterday and now came up and closed the down gap that we had only a few days ago. That's done. Gaps are almost always closed. And I think it's now bottomed out and on its way up, probably a week or two above 93.78, maybe quicker than that. And by the middle of February's new high for the trend. My best educated guess. Back to the E-mini. Hey, it's doing pretty good, hanging in there. So I'm now pretty convinced that this is way off the track timing wise for Head and Shoulder. So obviously I'm going to delete that and then delete that. And what do we have? Extreme overbought condition, a bit of a dip. New highs for the day or session and a bit of a dip, but no new lows. And now maybe another new high in progress. You guys have a great day. Profitable trading to you.